I gotta be somewhere at 2:30.
What time?
Is it muted?
It's unmuted. There we go. Just wait. Got 10 participants so far. Good afternoon, guys. Let's give it a couple more minutes to let a couple more people join in that said they were going to be joining in, and then we'll get it started. Thank you for joining.
I'm good. Were you able to hear? Jen?
Everyone can hear us?
No, microphone is working. What I want to make sure is that it's working is our audio. There you go. Yeah. Everybody's muted. That's all we can hear.
So somebody unmuted themselves?
Yeah.
Hey Jen, any word from Allison about the offer, question mark?
Let's start at 12 times.
Yeah, we can.
3 minutes to join.
Yeah, we'll wait a little bit.
Cool, see you then, Barbara, exclamation point. Okay, thank you. The address is 130 Pasadena Place. 32803. It's by downtown. Question mark. What time do you think you can make it tomorrow? Question mark. I just signed up for the LAR app.
All right, guys, thank you very much for joining us today. My name is George San Juan. For those that don't know me, this is
Dario
Javier.
Gonzalez.
This is Andrew Verdera.
Johnny.
All right, so we're gonna make this pretty much an introduction to the loan process. We'll get more into detailed trainings after going forward. But for now, we just want you guys to know what products we do have because we run everything in-house, from the conventional mortgages, the conforming loans, to the non-conforming loans, and even the hard money. So that's what we want you guys to be associated with, so that you know what you have to offer to your clients and expand your clientele to maybe clients that don't think that they qualify when they really do. So that being said, for those that don't know what a loan is, the conforming loans, those are the conventionals, the FHAs, the VAs, jumbo loans, those are all conforming loans. non-QM, which is a great product that we actually host in-house, where everywhere else they go outside. We actually have an in-house program for bank statement loans for any borrower that's 1099, that is self-employed, that their taxes might not really reflect how much they make. We do have the bank statement program, and that's more used for primary homes, could be used for investment, but mostly for primary. And we have the DSCR program, that's debt service coverage ratio. That's an investor program. That's for people that you don't even need a job. If the property qualifies based on the rental income, you don't even need to have any income for the actual borrower themselves, as long as they have a decent credit score and they do have the property going 1-to-1. If the mortgage is 2,000 and it rents for 2,000, they qualify. Obviously, the rates are going to be a little higher at that point, and it doesn't really make sense as an investment if you're just covering the mortgage, unless they're parking their money. If they're parking their money, then does make some sense. The other program that we do have non-QM is the profit and loss program, that we do have strictly based on the profit and loss, kind of like a bank statements program, except that we take the profit and loss numbers to be able to qualify them based on that. The other side is hard money. So we'll take the borrower where they need to go to make sure that you guys close the loan. You guys want to get your commission by closing the deal, we'll make that happen. We work as a team. So we are a team here, but the team also includes the realtor. The one thing that I can't emphasize enough, please don't try to sell interest rates, especially in this volatile market. As of today, interest rates are higher than they were. So if you're telling your client that they're going to get a specific interest rate, let us do that for you. Let them come directly to us. Let us be the ones to tell them, because if not, then you look bad when you tell them an interest rate, and then we have to come in and tell them, hey, look, this is the actual interest rate. You're going to put your deal at jeopardy, and we don't want anyone to lose clients. So let us take care of that part. And that way we do structure it for you in the correct way, that you're not midway through the contract and then there's some financing issues that might mess up the deal. We don't want that. We don't believe in losing deals, and we don't believe in those. If you have a client, they're either gonna get an approval or a plan. We don't believe in the word no when it comes to an approval. It doesn't exist. So just, that's one thing. I'm gonna let them come in and explain a little bit more of the conforming loans, and then I'll take over at the end to give you guys a better understanding of hard money. I know that that's a product that not everyone is familiar with, but if your client has 30% in their bank account, there's no reason that deal shouldn't be closed. All right, so I'll let them take it.
So before we continue, I did want to open it up to be more of a dialogue here with some people here. I see several other people already joining. Thank you guys for your time. Feel free to please ask any questions, interact with us. Let us know if you have any specific questions, or if you, obviously here's all our contact information. If you have a specific case that you want to learn more about, that's what we're here for. We want to be your #1 resource. So like that, as you guys continue to grow your business, you have someone that you can rely on. So as George was mentioning earlier, we work as a team. Us three, we work evenly across the board, and basically we're here today in the Orlando office, the new Orlando office in Pasadena. So basically we cover from here down south all the way to the Florida Keys. So if you need anybody as a resource, feel free to reach out to us. Give us any questions, any tough deals that you need. That's what we're here for. So we wanted to go ahead and today make it very simple for you guys. We didn't want to overcomplicate everything. This is something that we want to start over time, making more of these trainings where we specialize in one subject at a time, so you guys can learn as much as possible. So today is more of an introduction of who we are, what we do, and how we can help you guys grow. So like George was mentioning, just a little highlight of all the different programs that we offer. Here is a list of some of the areas that we really harp on. Obviously, in today's market, you guys know what's the situation with getting somebody with a qualified mortgage. We all know the conventionals, FHAs, VAs, and jumbo loans. But what happens with all the self-employed people who, unfortunately are declaring a lot of expenses, and now they can't qualify under a regular qualified mortgage. So we do offer these two kinds of programs are here, which are non-qualified. And I'll go ahead and turn it over to Andrew, my brother from another mother, Johnny, them two, and we're family. So Andrew, go ahead and cover a little bit more about this program.
Thank you, Dave. For now, do you guys have any questions? Okay, I don't see any more. All right. So guys, like Daryl was saying, we just want to be here for you guys. We want you guys to start like seeing you're gonna see our brand, and we want you guys to put this brand to our faces because we're here for you. The only way that you guys can become sharks is if you have a team, and we want to be here for you guys. Yes, is it true that the other banks can have the same products? Yes. Wells Fargo, Chase, what's the difference? That we don't treat you guys as a number. We want to build that relationship with you guys, and we pre-screen the client for you. You have nothing to lose. We don't charge. And if the client doesn't qualify today, I have an accounting office. If the taxes is a problem, we can fix it. We have also affiliates with the credit report to fix it. So anything that the client needs to get it qualified, we give you a plan, and then we give it back to you guys, and you're ready to go shopping. All right. So basically, the other thing that we have in-house is the non-qualified mortgages, which is they were saying the self-employed people and people that have businesses. So a lot of people in their mind, they think because they went to these big banks that they said, no, you don't qualify because you don't declare income in the IRS form. We have that in-house. So you don't have to wait like a week. We get it the next day, approved by the corporate office, and we treat it like a QM. So we have everything in-house: underwriters, processors, closers. We have our own processor. And we're gonna talk a little bit about an app that you guys will get a link for the client to apply. And you also, you're gonna get that link as an agent where you can send us the lead and you keep track. And it's gonna tell you where that client is, if it's completing the application, if it's already processing, if they went to underwriting. So everybody's on the same page. And you're gonna learn that in this business, the key to success is communication. And yes, you're gonna see a bunch of lenders. I got a question from Tyler. Are you open to collaborate? For sure. Yeah. So that's the whole point. We want to be the support for you guys. So if you guys want to,
We have the questions, I know you're responding.
yeah, everybody can see the chat. So Tyler was saying that if we collaborate with you guys, yeah, we also have a total expert. We can make flyers. So you're gonna be on one side as an agent, we're the lenders, and by phone, by Zoom, in the office, whatever you guys need, that's where we're gonna give you the support. I
Also, guys, please, we don't bite. Free to unmute
As long as
yourself if
you
there's
can
not
understand
something.
it.
Go ahead. I'm sorry, you were saying something?
Oh, okay, no worries.
Oh, I think she's,
And it's okay to just double check with everything. There's no problem with that. That's what we're here for.
Okay.
My pleasure, boss. Was there anything else I can do for you today?
All right, so Miriam said that you need a
All right,
pre-approval.
my pleasure.
Yeah,
Thank you so much for
perfect.
being the best party.
So we actually have an email that we
bye-bye.
sent you guys. We just need your information, and that's gonna have the need list, very basic, dummy proof, like super on point. Like it's gonna say like 2 bank statements, 2 taxes, because we're gonna look at the paperwork first, and then that's how we structure the loan. Oh, I saw the taxes, they're really low, but I see that this client makes a lot of money monthly, so let's do the bank statement program. So that's how we detect more or less how to structure the loan. And you're gonna get that once you guys give us all the information. You're gonna get that intro email with the link for the app. It's called Blend for Agents, and you're gonna see Johnny as the preferred lender. and it's gonna be everything automated. So what we want is to be your support, so you don't spend a lot of time in things that are minors, right? You wanna be sharp, you wanna be with clients, and we take care of that part. We're gonna mute. So that's side chat. Is there any other question you guys have so far? Move forward, Tyler, thank you. Looking forward to work together. Better, okay, no problem. Whenever you're ready.
Feel free to, guys, also, if you want to go ahead and put your contact information, our goal is not to blow anybody up. We just want to make sure that we make an introduction. We're here to build relationships with you guys, and understand what it is that you guys need. We're really, really big on feedback. Like that, we can be able to get better every single day to customize whatever kind of trainings you guys need. If you guys work in teams, I know a lot of you guys work in teams, and we can structure any kind of trainings from either cold call trainings, so you guys can be able to make, I know a lot of these offices are offering you guys leads, and everybody gets petrified of calling these leads, and it's just because of multiple different reasons. Most of it is just a lack of access to that information. Johnny and I have over 5 years of cold calling experience working at American Express prior to joining the mortgage industry. So we have developed a cold calling seminar where we can help you guys do for sale by owner leads and expiring leads. So that's one. And then two, obviously, is to be able to, if you have a particular question, we have Hometown Heroes is very trendy right now, and how to utilize what the program and all this marketing and all this hype to your advantage to generate more conversations, because at the end of the day, that's what's going to help us all, being in constant conversations with people, and understanding what their needs are. And if we can provide the solution for them, that's what we can help. So feel free to start putting here on the chat your emails or phone numbers, whatever your preferred contact method is. And what we can do is send this entire information of this presentation. And then also we can follow up with you guys, maybe grab some coffee and get to that, and to know what your structure in your business looks like. So see where we can help you the most.
I see Genesis. Is there a short list that generally explains some of the things? Yeah, I mean, in this presentation, we have the basic bullets. So it's impossible. There's so many laws and things needed for each product. So like down payment, the credit scores, years history of working. So there's so many things that you guys are gonna get bombarded, and we don't want you guys to become like lenders and know all the process and explain and get confused with the client. And we don't want that, because the reality is that no matter how sharp you are, it's the relationship you have with the client. So if you sell yourself and that client loves you, doesn't matter if there's a better realtor out there, because they like you. So once you build that relationship, all we want to be for you guys, if you have a buyer that needs a mortgage, we're gonna be there for you guys. And you're gonna get copied in everything, in all the emails. We do group chats, so you guys are always updated of what we're doing with the clients. And maintain communication. You're gonna see that that's key in this business. That's all it takes. We got another question. So guys, please send us the emails. Thank you, Tyler. So we can send you the presentation and the main bullet points. At the end of the day, all we want is, if you have someone interested, we have 2 filters. So we can have a regular conversation over the phone, ask simple questions, and based on what the client replies, then we could say, yes, this could go this route. And then once we get the paperwork, that's when we start doing the application. We don't run credits off the bat. We don't like making hard inquiries. And we look at everything before. So the whole point is the more time you give us the client to prepare them, like we'll give you a real scenario today, and we can also give you a scenario if they fix some stuff, if they pay some credit cards, the cars, or a student loan, whatever. And then we can say, okay, if they do this, or if they save a little bit more money, then let's say, for example, today they qualify for 250, but if you guys do this, then you're gonna get to a 350 loan. And we start working on clients. And it's all free, and you have nothing to lose. So I see you guys sending all the info. Thank you. Is there any question that you guys have for us? Yeah, they're putting all the contacts.
I have a question. Sorry, my voice is out. I don't know if I caught this part, but my name is Olivia, by the way. I wanted to know, does this work for clients who are looking to get a second property?
Yes, so that would be an investment.
Yes, an investment.
Yeah, so
Either or, it could be whether they're looking to buy an investment, or whether they're gonna make their property an investment to buy something else. And if they're gonna make their property an investment, now we have additional income from that property, so we can help the qualification for the next purchase.
exactly. So there's a lot of routes. If they want to cash out the property and buy another property, that will be doing an upgrade, and that's totally fine.
Would they, when you say cash out, I'm sorry, because I'm new, I just got my license. So when you say cash out, would they be leaving that that property like altogether and getting the investment? No.
So cash out meaning the equity. So let's say they owe
Okay.
a mortgage for 100 grand, and now the property is 250. So you have 150 equity. And usually you just pull out 80%, so you don't pay the insurance on the mortgage.
Right.
And you get money. You get money at close. So you get now you're gonna get a higher loan, but then you get cash.
And the beauty of this is that money is non-taxable, because it's not a capital gain.
Yeah, it's not real money. You gotta pay back.
It's a loan.
Got it.
A loan.
So you
Okay,
get
so
double.
that's perfect. Okay.
That's good
Thank you
for
so much.
taxes purposes. And like I said, there's so many options if they want to buy that property at the other property, and let's say the taxes are low, but they have the money. Then we got the program that George mentioned, which is 1-to-1. And if the rent is gonna pay that mortgage, all they have to put is 20%.
Perfect. Okay.
And that's
Thank you so
without
much.
experience. Once they have experience, it's 15%.
Yeah, it goes down to 15.
And experience is simple. They have one property that rents, that's considered experience.
Oh, okay.
If you guys are working with a lot of rentals, remember, like, what's the interest rate on a rent? It's 100%. So now people are like, no, but interest rates are going up, and now they're up to 6. Yeah, but you're paying 100% interest. So what do you have to lose when you're renting a place? Forget about the price. It can go down tomorrow.
You're already paying a mortgage. If you're renting, you're already paying a mortgage. You're just paying your landlord's mortgage.
Exactly.
Instead of paying your landlord's mortgage, pay your own.
Pay your own. Doesn't matter if the property loses 100 grand tomorrow. You were still gonna rent somebody else's property. So the whole point is for you guys, don't turn anybody down. Even if you think that that's never gonna fly, it may fly. So we're not gonna charge you guys, and you have nothing to lose. The client has nothing to lose. We don't run credits. We're not like the big institutions that you call Bank of America right now. Somebody in Nebraska is gonna answer the phone and they talk like robots. We don't fly like that. We want to build a real human relationship. And just any questions, a phone call.
Very important, guys. We know especially how hard you guys in the front line as realtors work, and the amount of time that goes into investing into building relationships with your prospects, taking them out, driving them around. There's nothing worse than having somebody feel you making them feel like they're, going to be able to buy when, like most other people, they don't research and they don't structure the loan early on in the stage. And because of the experience in our team, we've been working together for more than 15 years as a team in different kinds of businesses. And now we finally planted our flag in mortgages. And that's where we want to come in and bring a ton of value to you guys by being able to filter as much as possible. And by doing a lot of these trainings, competence equals confidence. When you guys start learning how to ask 4 or 5 little questions up front, you might be able to completely be able to decide, all right, this person is, for my pipeline for the next 30 to 60 days, or someone that may be a little bit more long-term, and we can nurture that relationship for you and be able to build a plan for them. But the most important part is having a team that can analyze these documents without running a credit score, while building relationships, while generating referrals for you. And at the same time, you're looking at, realistic scenarios, because we have a lot of control of this entire complex process. So with that said, do you guys have anything else you wanted to share?
Take over with
All right.
hard money.
So
Guys, do me a favor, because this chat is gonna clear once the presentation is over. So you have their contact info right there. If you want, go ahead and shoot them a text with your information. So if they already have your information, they could reach out to you and send you all the emails that you guys are gonna be receiving with the application and everything.
also, George, if you want to type in there your phone number. So George practically is our hard money lender for PRMG Dayland. He is the man with the master plan. He does not work with institutions. He goes directly with the lenders. So when all these programs, may not be the right one for the client, there's still an option for hard money lending. So go ahead and put your contact information there so everybody can be able to reach you in case there's any other questions as it relates to hard money lending.
All right, guys. So that being said, thank you, Daddy. I don't work with institutions, meaning I don't work with hedge funds or these companies that they just pool money. I have the direct lenders. My lenders lend their own money. If I don't have their phone number in my phone, I have their attorney's phone number in my phone. Either way, I'm direct to the money. When you guys hear the word direct to the money, that's what that means. There's no middleman. There's no people in between. I work with these people who are actually funding the deals. That being said, they're a lot more lenient, a lot more flexible. If your client has at least 20%, the magic number is 30%, but if they have at least 20%, chances are I can make that deal happen. You don't want them to lose that deal. If you have a good deal in your hands and they're paying rent, consider hard money as paying rent to yourself. If you're already paying a rent on the property or any other property, but you really want this property and they don't qualify right now for whatever reason may be, again, this is a plan. Hard money is just step one of the plan. We don't want to keep them in the hard money forever. We want to keep them in the hard money for as little as possible, that we need them in that to be able to qualify them to have that home for long term. So if they are paying rent and they're gonna eventually buy this house, these are investment properties at the end of the day. So what we need to do is get them to bridge over to a conventional or non-conventional platform of whatever program it is that we're gonna put them in. So this will be step one of that plan. There is no reason why you shouldn't be closing deals if your client has 20 to 30. Credit could be a huge issue. My guys don't even pull credit. They don't care what the credit is. They're strictly asset-based lenders. They're gonna look at the only one thing that matters, which is the property. The property is worth this. They care about that. They don't care who the borrower is, nothing like that. Obviously, that's what we do. We're gonna structure it so that we can set them in the right path, so that, let's say at 6 months, which is the title seasoning that we need for a refinance, we'll give them a 6-month plan. We're trying to get them out of that hard money as quick as possible. Are the interest rates high? Yes. This isn't something that you're doing permanently. This is something that you're doing just to be able to lock in the property, because if you don't lock in the property, somebody else is going to come and buy it. By the time that those 6 months are up, that property is going to be gone. Now, if they have control because they already own the property because of the hard money, now we're refinancing it. So they already own the property, and that's where you guys want to be at. Now, that's not the only use for hard money. you asked a great question. What if they want to buy another property? What if they do want to buy another property, but now when they bought that property, they qualified, they lost their job, whatever it may be, but their property has equity. Now you could use that to cash out the equity from the property and go and buy another property. Right now, the Airbnb market is crazy. Anywhere in Florida, this is the state that the market is not going to slow down in anytime soon. This is going to be a good run. So there's a lot of people making a lot of money on Airbnb. So reach out to your clients, previous clients that have bought the property, that you know that they have equity in their property. Start guiding them towards becoming investors. If they already have the equity in their property, draw that capital, leverage it, which is the word. You leverage that capital and you go and you buy other properties. And that's how you can, maybe they haven't even thought of this. Maybe they don't know that they can do this. Reach out to previous clients, reach out, just let everyone know. If they don't know, everyone's uneducated about what they have on their hands. If they don't know, they're not gonna reach out to you because they're gonna think in their mind they don't qualify. Now that you guys are learning this, this is the main focus of this presentation. We want you guys to know what type of programs are out there so that you can think, okay, this person could qualify for this. Give them a call, shoot them a text, let them know, hey, I have this program available. Let's talk about it. And then you make the warm transfer. We'll take care of it. We'll structure it, and then we'll keep you in contact so you know what we can do with this client.
I'm here. I have questions. I know you guys say you don't bite. So I know no question is a dumb question. I'm kind of scared to ask this, but what about if they don't have any property at all, never got any property, and they want to do like expected, be qualified based on the expected rental income? Is that
Yes, that's
possible?
where the DSCR program kicks in. So
Okay.
for the DSCR program,
They don't have a property.
They don't have
They
income.
never had a property.
yeah, they don't have any.
No
So
property.
they
No
don't
property.
have a property, no property, they're renting.
Correct. So there is exceptions that are made. If we can prove where they've been living and that the property does make sense as a rental, but they live somewhere, right? So they're renting,
Right.
right? So
Right.
step number one is find out why they're renting. Because if you're renting, why not buy a property? So
Correct.
find out why. There's a reason to it. There's not for no reason. They're renting for a reason. But let's say they do have a great deal that makes sense as a rental, and it doesn't, and it's not for them, because obviously a DSCR program cannot be primary. DSCR is a rental program. They don't even have to have a job. If the property
Okay.
makes sense, that is the income. So as an underwriter, thinking how you assess the risk of the loan, that's what you really have to think of. How is this person going to pay back this mortgage? Now, if the rental makes so much sense, that's how they're going to pay back the mortgage.
Okay.
So not having a property, that's step one. Let's find out why, because there's more to it. And yes,
Okay.
for the non-QM products, credit is a factor. They need to have some sort of credit. 620 is a bare minimum, but you don't want them at 620 because the rate is going to be through the roof. Now, for hard money, you don't need credit at all. Hard money, they're not going to look at the credit. They really do not care. They care about the asset itself. So if they have the money in their bank account to at least put down that money for the down payment, which is going to be the magic number's 30, I can go as high as little as 20%.
Okay. But so if they're renting, don't have any property, find out, why they're renting, right? And then see, okay, go ahead.
That's a buyer lead right now. They've been renting, let's say $2,000 a month. That's $24,000 a year. They're throwing that money away. That's 100% interest. That's all they're doing. So a hard money loan is an interest only loan, but it's a short period to try to bridge them over to a different loan.
Right. Okay. Thank you.
My pleasure. Any other questions? All right, guys, that being said, you have the info right there. Like I said, please shoot them a text, take a picture of the screen so you guys have all their info, and you can reach out to them in any clients that you have, any questions you have, please feel free to ask these questions. We want to build you guys as realtors, and the whole process starts at the loan. Because if you don't know how much they qualify for, can't go shop. So the process starts here. These guys right here, they're gonna take care of that for you, and they're gonna structure that person for you. When you get a pre-approval letter from us, it's not a pre-approval letter from a bank that a 2-year-old can go and type in a number in a computer and give you a little letter. We run the numbers, we make sure they really qualify. We don't want you guys to get all excited, go get this person under contract, and then it comes back. And let's be real, as realtors, you're not gonna accept an offer with a pre-approval letter. You wanna see a DU, and we're gonna give you guys DUs. We're not gonna give you a little pre-approval letter with a imaginary number on it. All right,
DU will be the actual approval of the loan, that once we check all the paperwork, that means that based on the papers and everything that we check and we put in the application, it's already approved, meaning that income, credit, line of work, the
it's all been
taxes,
verified.
yeah, everything has been put in correctly, and the system is saying, yeah, according to the Fannie Mae guidelines, that we're all regulated. So a lot of people think like, oh no, Chase is giving a better rate, or they have better programs, and we're more expensive. No, if you look at the small letters of the ads, that it's called bait and bite. So yeah, bait and switch. So they kind of like give you guys, or they start advertising like really low rates, and when you look at the small letters, they're asking to buy the points to get a lower rate. It's assuming like a 800 credit score scenario with 20% down, so the perfect scenario, like, and everything varies. So that's why we don't want you guys to focus on the interest rate. Just try and get somebody with a conversation and see what happens.
The only thing we're not gonna give you a DU for is the non-QM products. Non-QM products do not have a DU. They don't go by desktop underwriting. They're not Fannie Mae, Freddie Mac, nor Ginnie Mae products. These are backed by the stock market, by the stock exchange. So it's completely different. Conventional mortgages, conventional FHA, VA, those are backed by the Federal Reserves. The non-QM product, which is honestly the magic products that are making people never qualified be able to qualify nowadays, those are backed by the stock market. So that being said, there is no DU per se. As long as they do qualify based on bank statements or whatever program we put them through, that's going to be the qualification letter. So that is a little bit different. Yeah. All right, guys, thank you very much for having us. We appreciate everyone on here. Any questions, please feel free. Again, snap that picture because we are going to end this chat. So snap that so you have their information, okay?
All right, guys.
Thank you, guys. Have a great
Bye,
one.
guys.
Have a good one.
Bye.
Bye. Have a good one. Thank you.
Let's see.
He's waiting for the criticism.
Well, good, sorry, I've been distracted.